Hello, everybody. Dan Lucas from Credo here, and today we are on day 9 of 50 states in 50 days. And today we're doing New Hampshire. So we are sticking around the New England area, which makes sense because we're doing this in the order that the states were admitted to the Union. If you've never been to New Hampshire, it's really beautiful there. That entire area, Vermont, New Hampshire, Mass, Connecticut, Rhode Island, Maine. I mean, we've done the whole trip several times, a lot of times in the fall. It is gorgeous up there. So if you've never been up there, it's a great part of the country to explore. I highly recommend it in the fall. A lot of fun things to do, a lot of festivals. They really know how to do it up there in New England. So anyway, props to everybody up in that area. Okay, so New Hampshire was admitted to the Union on June 21st, 1788, just about a month after South Carolina. So not too much time passed between the two. And New Hampshire is a state that has no state income tax. So their tax credit program is somewhat limited. They have 4 main tax credits, which I'm going to go over. 2 are pretty self-explanatory and 2 are sort of nichey. So I am going to go a little bit deeper in those last 2 just because we have more time on this video because there's less credits. But what I will say is that in New Hampshire, there are property taxes, and you're going to find that in a lot of states that don't have state income tax, they're of course reliant a lot on sales tax, property taxes, other type of local taxes. And so, they still have those kind of taxes, and a lot of their credit programs will go against those type of taxes. The other type of taxes they have to fund the government a lot is corporate taxes, business taxes, okay? And so when you're in some of these states that don't have a state income tax, you're going to find that a lot of these credits are things that are used against property tax. It could be like sales tax, holidays, incentives, things like that, and also corporate taxes. Okay, so just kind of keep that in mind when we talk about states that don't have a traditional state income tax. Okay, so the first one is the New Hampshire Research and Development Tax Credit, which that's the R&D credit, and their official wording is it enables businesses to apply for tax credits on new research and development costs that they can use toward business taxes paid. Again, business taxes. Okay, so bigger companies will probably get more of a benefit from this, and these can be carried forward for 5 years. I'm not sure if they're transferable. I haven't seen anything on that. If you know if they're transferable, please comment on the video, put it in the comments here that it's transferable if you happen to be a tax professional that's very familiar with New Hampshire. We've talked about the R&D credits a lot, and if you're not sure what those are, I talk about those a lot in some of the other bigger states, like Georgia would be a good example. Okay, there is the Economic Revitalization Zone tax credit, and that tax credit offers a short-term business tax credit for projects that improve infrastructure and create jobs in designated areas of a municipality. All of the details of that you're going to have to look into, or we'd have to look into for you on request. It sounds a lot like the Opportunity Zone type thing where you'll see that it's related to real estate, and you are revitalizing, adding value, or taking an area and trying to add more prosperity to an area that might be struggling, that they're trying to lift up, not necessarily hand out, but a hand up to a certain area. If you go in there and you raise the value of properties in that area, raise the value of land in that area, they're giving you a nice little benefit there for doing that. And if you're creating jobs and things like that, so not atypical. Other states are the same way as far as creating jobs and helping real estate in historic areas or areas that need revitalization. The third one is called the Coos County Job Creation Tax Credit. And if I did not say that right, I am sorry, but to me it's pronounced Coos. And this tax credit is awarded to businesses hiring employees for new full-time positions that pay wages 200% higher than the minimum wage. 200% higher. Relax, it's of the minimum wage. Okay, so is that the state minimum wage or the federal minimum wage? Well, I'm not sure, but right now the 200% is not necessarily a very high paying job. So if you are in professional services, I would think if you're hiring anybody with, let's say, a salary of 35, 40, 45,000 and up, that would qualify for 200% of minimum wage. So it's not necessarily a really high bar to go over. Now, if you have a again, professional service, or if you're like, of course, like a dental office, or anything where it's not something where you're hiring a lot of minimum wage personnel, is something you want to look at, I'm sure, if you're in Coos County. Now, I'm going to go into this one a little bit just because we have a little extra time. So this is obviously for business organizations that create new job in Coos County during the fiscal year by hiring one or more quote-unquote qualified tax credit employees. And what that means is it's not an employee that is shifted to a new position because of a merger, acquisition, or restructuring. It's people that are laid off and retired within 270 days. Oh, I'm sorry. The employees that are laid off and rehired within 270 days do not qualify for the credit. So it's sort of similar to like wash sale rules. If you know anything about that, when you sell stock and buy it back, you can't do that just for the tax play. So what they're saying is you can't just like lay off people and then hire them back to get this tax credit. But you obviously have to be in Coos County and you have to file an application for it. And it looks like the credit it's not huge. It's $750 or $1,000 for each qualified employee, just depending on, I think, how much that person is getting paid. But it can be taken against, all your business taxes. So, it's still, if you're a small business owner, big business owner, whatever, you're still going to have to pay that money. And if you're a pass-through entity, you're still going to have to pay it. So it's just as good as a personal credit in that circumstance. But I think the biggest thing on this is just that you have to be in Coos County. But other than that, it sounds like if you're hiring people that aren't minimum wage or normal office jobs, things above that, no reason you shouldn't be getting this credit as far as I can see. The last one is called the Work Invest NH, and it is a kind of one word that they've kind of jumbled together. And it provides a 50-50. So 50/50 cash match grant of $750 to $100,000 for customized training of a company's employees. So it's kind of similar to a credit that we talked about in another video when we talked about Georgia's tax credit. We talked about the retraining tax credit, right? And so the Work Invest NH, of course, NH is New Hampshire, and I think this was called the New Hampshire Job Training Fund before this. I think they renamed it, coined it, branded it, whatever. Work Invest NH. It's available to businesses or co-applicants physically located in New Hampshire and businesses intending to physically locate in New Hampshire. Okay, so even if you're intending to locate in New Hampshire, you could qualify. You have to pay quarterly taxes to the New Hampshire Unemployment Trust Fund. You have to be in compliance with state laws and regulations. And it's available for existing workers who are either residents of New Hampshire or who work at a business or co-applicant that is located or intends to locate within the state. Okay, again, intends to locate within the state. It's a minimum 1-to-1 cash match. That's awesome. And the minimum grant allowed is $750. It says in here that any grant award of $70,000 or more has to be approved by the governor and executive council. Wow, pretty cool. Probably get some recognition there, right? Or at least get your name in lights. And a fully executed contract must be in place prior to the beginning of the training. Now, this is key because this is the same thing in Georgia. You can't just get these credits post facto. You can't do all this stuff and then apply for the credit later. You have to apply for the credit in advance. Get the okay, then go ahead and do all the training. Okay? If you're not sure if you qualify for that type of training, you don't have to be sure, okay? Because you have to get it approved in advance anyway. And sometimes you send it in and they don't approve it, but they don't approve it for certain reasons. You can amend it and change it until you get it approved for something that fits their parameters. So, it's a really good thing. And then you can decide whether to go forward or not. And sometimes it's like, well, hey, look, if I spend $50,000 on retraining my people, or again, if I'm intending to move to New Hampshire, I keep saying North. I don't know why I keep saying North. If you're intending to move to New Hampshire, then you apply to see if you can get this credit for spending, let's say $50,000, just a round number, and it might work out great for you, right? It might not cost you nearly that because you can get that money refunded, okay, virtually. So anyway, a lot of these cool things are and this goes with a lot of other different credits, and we'll get into this in more states, but you prepare this stuff in advance, you get a plan, you apply with the state, you get approval from the state, and then you decide whether or not to go forward. And you take the cost of it, and then you look at the benefit of it, and the benefit now includes tax credits, okay? Okay, so do that. Do some homework on it and see what you can do with it. Let's see. So the things that are included in it, or the type of activities, would be structured on-site laboratory or classroom training, basic skills, technical skills, quality improvement, safety, management, and supervision, English as a second language, other training programs that enhance the state's workforce development. Okay, so you want to apply for this thing. Looks like 60 days in advance of the anticipated training start date. And again, if it is a grant award, if you're applying and you're expecting a grant award of $70,000 or more, you can't start until you get approved by the governor and executive council. And you have to show proof of workers' compensation. But again, this is one of those things, like, apply for it, see if they'll approve it, and if they do, it could totally change the economics of whether you're going to do it or not, right? And again, you can even you retain people doing this kind of thing. So just outside of tax, just business, retain people, attract people, that type of thing. So, these tax credits give you a lot of opportunity to think a little bit outside the box and be creative and use some of these tax credits to spur on the economics and try to get some 2-for-1, some 3-for-1s, really maximize some of these activities you're doing in your business to get more than just tax benefits, right? Because anytime you're investing in your business, you can look at that investment and decide, how can I get the best bang for my buck? How can I get the best investment return off this spend? And I'm going to get this thing subsidized, or I'm going to help get some government tax credits or grants, or, virtually ends up being almost the same thing, and really spur this forward, right? So I can do 50 cents on the dollar stuff, and I can get $4 on the dollar back in investment, and I can have an 800% ROI instead of a 400% or less, right? So anyway, that's all really for New Hampshire. It's kind of a light state as far as that stuff. Again, no state income tax, so it doesn't necessarily mean it's bad, because some of these other states that have a lot of state credits, state's only as good as the net, right? So if you pay income tax and then you net it out with some credits, that's fine. But if it has no income tax to begin with, that's better than paying some income tax and taking some credits, but still paying a net amount. Okay, so anyway, that's it for New Hampshire, and appreciate your time today. It's probably not going to be really relevant to a lot of people unless they are thinking about moving to New Hampshire, because if you are, we talked about, one of these credits just has to do with you anticipating a move there, and you're trying to see if this thing will get you over the edge to actually making the move. But that's it for New Hampshire. So day 10 is Virginia, and that's going to be way more robust than as far as the volume of tax credits. And we actually have a lot of clients in Virginia, so I'm going to take that's probably going to be a longer type video. It's going to probably be more like a 20-minute video. So we'll do Virginia tomorrow, and until then, thank you and have a great night.